What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video we're going to talk about Dodo. Alright guys, Dodo, they just launched V2. If you guys don't know what Dodo is, it's basically like 1inch and Uniswap on roids. Anyways guys, in this video we're going to break down why I'm super bullish on Dodo, and we're going to add at the end of the video a full featured segment on the overview I had on Dodo. I did it about 2 months ago, but anyways, the same content still pertains, so I will get it out there for you guys so you guys can check it out. Anyways guys, if you guys are new to the channel, make sure you guys do 3 things for me. Like, subscribe, bell button, leave a comment in that description below saying you subscribed. You will automatically get thrown into that drawing to earn $100 in free BTC. By the way guys, we're sponsored by BlockFi. If you guys want to sign up with them, there's a link in the description below. You can actually get up to $250 in BTC for signing up. We also got Celsius down there as well. I like both of those. Those are cool little interest accounts. Anyways, let's go and get into Dodo. Let's talk about it. What's cool and what I really like about Dodo is they are multi-chain. They are on Binance Smart Chain, Ethereum, and Polygon, guys. This is fire sauce. What is so special about Dodo? Well, at the end of this video, I'll explain it why, but it's an aggregator and it takes it from multiple exchanges. And this is how it works a little bit. So look, as you guys can see, they're checking prices at several different websites. As you guys saw, they'll look on 1inch Kyber. They obviously look on Dodo, Uniswap. They look all over. Anyways, guys, it's just a DEX aggregator, but it's different. They allow you to provide liquidity on here, and they have a crowd pooling mechanism. When I explain in this video why it's important, the crowd pooling is it's actually even better than something like a Uniswap, because say you want to launch a token on Uniswap and you have 1,000 tokens and you're saying they're $1,000 a piece. Well, 1,000 times 1,000 is 1,000,000. In that scenario, to give the full liquidity that you want to give for your token, that's going to be $1 million that you have to put up front. That's not easy to do. With Dodo, they allow you to just put your tokens up and they allow the rest of the community to tell what it's worth, or they can crowd pool. Why is that important? Well, dude, it allows innovation to occur. You don't just have to have money to innovate. You can actually innovate with great ideas even though you don't have money. I mean, guys, most of these protocols come out, like for example, Ethereum. Dude, they literally came out of the woodworks. They were all working down in a basement, and when they were working together, it would be like, hey, who's buying pizza tonight? It was like buddy type of thing. They would pay each other, and their salaries were paid in pizza. And yet they built the largest smart contract platform on the planet. And here's just a quick overview of some of the pools. This is on Ethereum, guys. If you want to check out the other pools, make sure you guys go to Binance Smart Chain or on Polygon to check those out. As you guys can see, the LP pools are pretty lucrative. And you can provide single-sided if you want to do that as well. So you don't have to provide all of it. So it supports single-sided provision at any ratio. So you can select a certain ratio that you want, or you can just say, hey, I just want to put in a certain amount. And what's really cool is Dodo, they are about giving. So when you provide liquidity, you can also invite friends to do it, and you will earn a portion of theirs, and they can invite their friends, and they earn a portion of theirs, etc. I also have my own invite code as well if you guys want to join. It's under the Dodo V2 mining. I'll leave a link in the description below so you guys can see it. But right now, my vid Dodo, this is what I'm earning, and it earns 99% APY on these Dodo tokens. They're auto compounded. So in order to get these, you do have to mint VDODO tokens. And how you mint the VDODO, keep this in mind, guys. You will have fees when you do this, but when you guys are minting them, it's really easy, actually. It's for 1 VDODO for every 100 DODO. But there is an important thing you need to know. Whenever you redeem them, there is going to be an 8.81% exit fee. This does change, but it actually is going to be going towards 5%. It used to be about 10% about a month ago. It's slowly changing over time. But with the DODO tokens, it's like, dude, you're earning 100% APY, or almost 100%. And you actually get, let me just go ahead and show you guys the tokenomics on this sucker. First off, besides governance, Dodo tokens have 2 utilities: crowdfunding and IDO allocations. Why is this important? Well, if you guys want to get into those early token offerings, you know, the ones at 100x or even 1000x, yeah, this is how you can do it. trading fee discounts so you can actually trade lower amounts with Dodo. Another feature of the Dodo token, well, quote unquote VDodo, is it actually gives you a proof of membership in the loyalty program. It is not transferable, so you can't trade these VDodo tokens, but you can mint them back to DODO tokens. VDodo will give holders dividends from trading fees and membership rewards, in addition to the same benefits of holding DODO tokens. So also another thing you guys need to know is redeeming VDodo and Dodo. Like I mentioned to you guys, it has a variable exit fee. So like I told you guys, it's 8.8% right now. That does fluctuate, but it is going to be going to about 5%. So that's something to keep in mind. Again, here are the utilities and benefits, trading fee discounts, crowd pooling, IDO allocations, and governance rights. I'll go ahead and show you guys the IDO allocations. So it's pretty interesting and cool to see as well. As you guys can see, like I was telling you, the exit fee is going to be going to about 5%. You guys can see this explains the math on how it does it. So it started actually about 15%, and it goes down to about 5% based on how much the Dodo loyalty index is. Here's just a quick overview of some of the crowd pooling projects that they have. Well, it just went away. Let's go and refresh this. Here they are. So as you guys can see, like Talal, Wrapped ETH, Blue Zell, and I'm not sure what AB is, but you guys can see AB, it's just a random launchpad project. So that's the point. You can launch these different tokens here. And we just went away again, guys. You know how my internet is whenever I do these videos. But you guys get the point. You guys see all these tokens. And if you ever participate in any of these, you can just hit claim. And it'll allow you to claim your tokens that you deposited into. So, for example, this pool was literally called claim. But you guys can check out the address here. It'll pull it up on Etherscan. Maybe they just didn't name it, or they did actually call it claim. But you guys get the point. You could have participated in this by depositing some DAI tokens and adding liquidity. This is how the crowd pooling mechanism works, and you will be rewarded in tokens for doing it. So like one claim equals 0.5 DAI, but I'm sure it will cost way more than 50 cents when it launches, because how launch tokens work is there is not a ton of tokens on the market. So whenever they launch, well, dude, it's like massive price appreciation. That's just typically what happens. And these are some pools that you can add liquidity to now. So for example, this one is an ETH pair. If I wanted to add liquidity, I just have to add some Ethereum and I can deposit and hit add. I'm not going to deposit into these. I'm just showing you guys the different features of it with the IDOs and how they work. So they have a pretty cool feature. It gives the Dodo Dashboard. This shows a couple of stats that were happening on the actual Dodo exchange. So for example, the past 24 hours, there's about 7,000 trades that were made. Most of them were on Binance Smart Chain. Surprise, surprise, not really. You guys can see they had a lot of TVL on different chains. Right now, Polygon has a low TVL. I want to kind of see why, so let's go ahead and check it out. Also, you guys can see the trading pair data. This is pretty interesting as well. But guys, my internet is super slow, but this will show, basically all it'll show is it'll show the type of tokens that they are giving the data for. So for example, USDC, DAI, and it gives the volume, liquidity, and the trades in the last 24 hours, etc. So here's on Polygon. You can do the same thing as well. You can provide liquidity over here as well. And they're pretty, look at this, 87% in stable coins. A lot of people aren't talking about this on Polygon, but it does earn Dodo tokens, so that's something to keep in mind as well. The trading fee APY is 87.12%. So if you guys want to check this out, make sure you like destroy the yields. No, I'm just kidding, guys. Don't do that. But anyways, guys, that is a quick overview. Now I'm going to give you the full detailed video, but first we're going to leave you guys with a wisdom one-liner, and we're going to go ahead and get into the video so you guys can understand what Dodo's got going for it. Proverbs chapter 21, verses 26. All day long he craves for more, but the righteous give without sparing. Give. Did you guys miss on SushiSwap? Did you guys miss on Uniswap? Well, don't miss out on Dodo. Well, first off, I'm going to start off with this, guys. I'm not a financial advisor. I'm just talking to you guys about the project. I'm excited about this project first is because, well, it involves a bird, and Birds are my favorite animal. No, well, birds are my favorite animal, but still, that's not what I like about the project. That is cool about it. It's kind of got a meme going towards it, but this is huge. So just like you guys go to Amazon or Google or eBay and shop prices, and that takes a lot of time, right? Well, yeah, you're gonna say right, or you can leave it in the comments below and say, yeah, bro, you're right, I do. And if you don't, well, you're missing out on savings. Or you're just, there's not an app that's out there that does that, but there is. It's called Honey. If you guys want to check that out, that's a cool little app too. Or another one is, it's not Ratukin, that's like a cashback app, but you get the point. Anyways, so basically what Dodo is looking to do is they're trying to be the honey of the crypto sphere. So they're trying to get you the best price, the best rate on all exchanges. So it's amazing. I'm gonna talk to you guys about the website, but let me show you guys an example, just so you guys can understand what I'm talking about. So let's start with 10,000 USDC. Well, in this case, we get $10 less and DAI. Wow, that's not bad. And the slippage tolerance is, well, 0.5%. So you do have to keep this in mind. They also give a cashback on the gas fee. So let me show you this. It's not going to work right now because I got to lower the amount. But look, gas fee, 0.075 ETH, will return 0.031 ETH. So they're returning gas fees to you. So you're actually getting lower gas rates too, or theoretically similar gas rates. Or obviously, like on 1inch, they have their own Chi token. They actually are going to be integrating the Chi token on this exchange, so do keep that in mind. So now let me get back to the point where I was talking about, okay, so we have 10,000 USDC. $10, not much. Okay, let's check Uniswap. $46, not too much. Now add another zero. Now it makes a difference. That's $705. Add another zero, it's only a $94 difference. So $705, $94. How about we add another zero? Now we're getting into the thousands. So look, in this case, it's only $926. Now we go on Uniswap, add another zero. Now let's see what happens. Look at that, guys. That's $4,200, just about $4,200. It's $4,165 of slippage. That's huge. $4,000. So it may not seem like a lot, but now you guys can understand the concept and now where it's coming from. Okay, Johnny, that's great and all. You're saving thousands. Okay, what do they do? How in the world does it work? Well, it's awesome. So they grab from all the different exchanges. So it's not just one exchange. They actually go to several different ones and get the best price. So this is how they do it. So instead, Uniswap is only able to pull from their liquidity. However, with Dodo, just like 1inch, they're able to go through different exchanges. So 1inch will grab from Uniswap, this exchange, 0x, Bancor, Honey. It'll grab from different exchanges and grab some from each. Because if you grab a certain amount, it'll be too much for the exchange to actually handle. So if you haven't tried it yet, go ahead and try to buy $20,000 of a token that is like, I don't know, 900 on the list of CoinGecko. It's not going to happen. It's like, well, I mean, it will happen, but you're going to be paying like, I don't know, 100x the price of what it should be. So it's crazy. So you're going to have some crazy slippage in that, and you're going to have to pay excess fees. So this is getting rid of that. And it's really cool. So yes, the gas fees are a little bit higher because the contracts do cost a little more. But if you think about it and you're investing or you're trading with several $1,000s or more than a small amount of an order, as I showed you with USDC to DAI, you're saving thousands. So that little measly gas fee becomes nothing. And on top of that, they're rebating some of the gas fee. And when you're buying the Dodo coin, they're actually getting rid of the fee for trading. So like if you look on Uniswap, you have a liquidity. So Dodo is a liquidity protocol powered by the proactive market maker. Basically what the proactive market maker does is it has a fluctuating scale. So depending on how much the order is, they have a value called K. It's a little bit complicated. I recommend you guys take a look into the white paper. Let me pull up the white paper so you guys can see it. So they have the quote-unquote Dodo curve. So initially, the value of K is going to give you a price. So first, you have just K equaling 0. So what this entails is, hey, I'm buying one apple and it's $5, and another person's buying one apple and it's $5. But eventually, all those apples are going to get bought up. So then we're going to have a separation. So one guy's trying to buy apples for $5 and another guy's selling it for $7. Then you're going to have a situation where no one can buy and sell, and the market will not move. It just doesn't move. So with Dodo, they have a value of K, and depending on how much is out there, obviously this will change. And it is a smaller cap gem. So currently this is only a $51 million market cap. And now you guys are like, well, that's so tiny. Yeah, you're right. It's got a lot of room for growth, and it's got a maximum supply of 1 million, just like Uniswap. Now, if you guys are thinking of, man, how much potential it could have, look, Uniswap, 5.7 million or billion dollar market cap, 1 inch, 487 million. But you can't really take that into consideration because the fully diluted valuation is going to be 7.6 billion. Then you have Dodo, 51 million. So it's kind of like, wow, there's a lot of room for growth. There's a lot of room for improvement, and it has room to grow. So that's also what I like about it. It's an altcoin gem. It's not something that's just like, oh, okay, great. And another thing is, Dodo also has a feature where it gets rid of impermanent loss. So what is impermanent loss? Well, when you deposit 2 different tokens and say both of them go up, when you go to withdraw, those tokens are going to be less than what they were because you deposit into dollar value, or a dollar ratio or equal ratio, 50-50 ratio. So 1 ETH for 500 or 1 ETH for 100 USDC. That's your 50-50 ratio. Now say ETH goes up to $200. Now your ratio has to drop back to 50%, because if that ETH goes up to $200 and you have 1 ETH in there, you're at a ratio of 200 to 100. So when you go to withdraw, you're only going to get 100 USD and half an ETH. Sounds like you got gypped off, but then again, you do have the total value that you deposited in there, and it also goes the same way as in if it's going down. So a good option is, in my opinion, if the market's way up there or crazy high and you think it's not going to go anywhere or it can't go any higher, throw some ETH or other cryptos into liquidity pool. That way it'll multiply it on the way down. But anyways, guys, not financial advice. I was just thinking about it. And again, do I have to deposit pair tokens? No. So that's what differentiates Dodo. So in order to pick a good crypto, you have to, or pick a good project, you have to figure out what they're doing different. So Dodo is doing a lot of things different. First, they don't have the feature, or you aren't required to deposit one-to-one tokens. And not me alone, but I'm sure there's several people besides just me who don't want to participate with impermanent loss, because especially in a bull market, you're going to be losing your tokens. So it's like not worth it. And then second, they're similar to Uniswap, so I can't really give them this. But second, they do have the PMM, Proactive Market Maker. Before it is a automated market maker. The proactive market maker is basically an Oracle aided algorithm. So they're getting the pricing from an Oracle. So how they do this is I think it's with Chainlink or Band they're integrated with. What happens, if you guys know the exact one, just leave it in the comments below. I was more so looking into the data and the information on this project. It's crazy. But basically what's going to happen is they get a price feed from the Oracle, say it feeds every 10 seconds, and say Band, or let's say Bitcoin. Bitcoin goes up 10%. So it goes from, we'll say $10,000 to $11,000. Now there's a huge arbitrage opportunity, because one guy, he can buy it at under 10,000 or at 10,000 and sell it on another exchange for 11,000. Now that's an arbitrage opportunity. However, what Dodo will do is they have the 0.3% fee, and what's going to happen is when that guy buys it, he'll have to buy it with a 3% fee, And then on the sell side, there's also a 3% fee, so, or 0.3%. So it's going to come out to a 0.6%, and that's going to affect on the purchase. Obviously, a coin's not going to go up 10% in 1 second or 10 seconds. So this is a theoretical example, but you guys kind of get the concept of that's how it's going to retract against the people who are partaking in arbitrage and ruining orders, because they aren't going to be able to profit as much, so they won't participate in it. And then again, it'll provide a fair exchange. It sounds a little complex. I understand. Believe me, I looked at this project 4 or 5 times and I was like, what is so special about Dodo? And then I keep looking at different spreadsheets and different articles about it, and on Twitter tweets, and I keep seeing other videos about it, and I keep seeing Dodo, and I'm like, what's Dodo? I mean, it's like Doge. No, I'm kidding. But Dodo it's crazy. So now that I kind of looked over it, guys, I recommend looking into it. It's crazy. I like to relate it like this. So you can relate it getting the best price for what you're getting. As I showed you with the DAI and USDC example, it literally saved you thousands depending on how big the trade is. It's awesome. Again, this is another feature of Dodo. I got to get into this. And they are working on a layer 2. I mean, what aren't they working on? They're possibly going to be integrating with Binance Smart Chain. It is a rumor, so we don't know, but they are going to be upgrading to V2, and we'll have more details on that later. So stay tuned to the channel. I'll keep you guys updated, or you guys can leave it in the comments below as soon as you hear that rumor confirmed or changed or denied, etc. So currently there's 3 major liquidity offering methods on DEXs today. So the first one is a bonding curve. And obviously what happens is a major whale buys up all the tokens and they front run everyone. And there's no limit, and they just get them all, and then they drop them on the market, and everyone's like, oh man, pump and dump. The next one is the yield farming. You guys are probably familiar with this, like PancakeSwap or Kebab token. What happens with this is people farm the tokens, they get all their tokens, the price pumps up, and they just dump them all. There's no penalties for withdrawing your liquidity. I mean, that's the part of yield farming. Obviously, you have the transaction fee, but if you're on the Binance Smart Chain, it's nothing. It's like pennies, so no one cares. And then on top of that, you also have, or the third option is token auctions, which are ICOs, and that's very limited. And then obviously you have ones that are newer, like PolkaStarter or DDIM. But this kind of integrates a similar concept like DDIM. So they call it crowd pooling, just like the other ones. They're similar, only so like you can only deposit so much. So instead of all of it going in at once, there's a time lock period, so you can go in. This is coming out. This hasn't come out yet. This is going to be on Dodo V2. It's on Dodo V1.5. I like saying Dodo. But you deposit the tokens, and what happens is, as the tokens are deposited, you're only allowed to get a certain amount. So you're limited to that. And it's locked up into a time frame. You guys probably can't see this. Oh, here you go. You guys can see, look, there's a time frame on it. So you can follow, join, where you guys get alerts, and you can get equal-sided liquidity. So oh, there we go. So that's how you can distribute your token asset equally. So instead, the reason why you want an equal distribution, so there's not one whale who can just pump and dump. So the crowd pooling ends, the participants can claim their tokens, and obviously if they overpay, they get a refund, and so on. So it's really cool. And it also provides protection against rug pooling. So the bid side liquidity is established by the crowd pooling participants. However, the initial liquidity, which is from the person who started the project most of the time, cannot remove the liquidity during the liquidity protection period. So there's a set period that there is no way to rug pull. And obviously as more price, and as the price is more leveled out and found out, there's not a likely opportunity to pump and dump it. Well, because it's already been leveled out and there's a lock-in period. So it's really cool. And there's no front running and crowd pooling. We already talked about this. So front running is basically when you buy all the tokens up at a lower price and then just dump them on someone. Or you can like front run an order by paying higher gas fees. So what this relates to is like someone pays like 100 gwei, or I'm sorry, 1,000 gwei to get a transaction to go through, and the other guy he pays like 500 and it can't go through because he didn't pay enough. So it's a complex system, but it's a bidding system with Ethereum. That's the part that's broken about it, but that is being fixed with Ethereum 2.0. So we'll see what. So now let's talk about the game changer for Dodo, the Dodo vending machine. So this is it's a little bit complex. I was explaining the K values, but now I'll kind of explain it with the examples that they give. All right, so suppose you're a blockchain developer. Obviously, guys, there's a lot of people launching projects, and they're launching projects because they have a great idea, but not a lot of money. So they want to issue 10 million tokens, which 1% or 100,000 is for yourself. So they want to say, okay, I want to take 1% of the tokens, and the other 9.9 million tokens will be distributed to the community. So yeah, you can do airdrops, that's awesome. Or you can do faucets, or you can do a ICO, but now here's the issue. They're gonna buy them and dump them. Now let's say if you have a token price for $1. That's what you want it to be. And you want to create a liquidity market for all 9.9 million tokens. However, you're gonna need another 9.9 million in a stable coin or Ethereum or the other side of liquidity, because that's how it works. It's obviously a large amount of money. I don't need to explain that. But the alternative to that is creating a AMM pool, which is with lower tokens and less liquidity. So this is how the K figure is going to work. So say someone wants to invest $100,000. In order to buy some of your tokens, he's going to have to pay $100,000 and only receive 1,000 tokens. So if you're only able to provide 1,000 on the market or 1,000 tokens because you only have $1,000 and you don't have $9.9 million, now some whale or someone wants to buy $100,000 of your token, they'll come in and buy your token and they'll pay $100 per token. So it's automatically, oh my goodness, dude, this guy just paid on, and he bought up all our liquidity. Now he's going to sell these tokens for thousands of dollars. And it's like, oh snap. So however, with the Dodo vending machine, there's 9.9 million tokens with an initial price of $1 and a K value set to 1. So it'll basically be $1 times 1K. And the reason why it's 1K is because if you do $1 times K and the K value is 0.05, well, you're going to get a lower than 1 price. So keep that in mind. So then if the community member who wants to buy those 100,000 tokens, his average price is only going to be 1.005 because you set that K value to that certain price. Because if there's only 1,000 tokens on the market, it makes it go up in price and crazy liquidity. You can set the price. So instead of having it just go with the supply and demand, it'll allow you to change the price of the token. And you can obviously fluctuate the curve of K, like if there's 1,000 tokens bought, then we can increase the price or increase the K value just by a little bit. And then you also have another example with the stable coin. So say for example, X tokens drop below 1 DAI, you'll need to raise the other side of liquidity as soon as possible or else it'll be offset. We already explained that to you. And then obviously when it's offset, it's going to be worse and worse and worse. It's just like the shorts. So you guys recently saw this with the game stocks. People were buying up, or people were buying it and people were shorting it on the other side. And as the price is going up, they're losing their buns on the other side because they're shorting this thing, and it's just multiplying how much money they're losing. So they have to buy in at some point. So they start buying it, makes the price go up even more, and it's just a vicious cycle. So with the Dodo vending machine, you can set an X DAI pool, set the initial price to 1X equals 1 DAI, and set K to a very small value. So that way you incentivize liquidity providers to deposit their LP tokens, because the rewards X increase when the DAI goes down in value. So it basically, it's almost like how Ethereum staking or staking projects work. The more you stake, the lower the staking rewards. The less at stake, the higher the staking rewards. So you guys can look into these articles. I'll leave the links in the description so you guys can see it, but it's crazy. So here are the 3 things. We already talked about it. We talked about the one-sided deposits, game changer right there. Changing in the price curve, so we also talked about that, and they have the vending machines, that's cool. And have liquidity everywhere in a price range from 0 to infinity. And how they do this is, again, they pull from different exchanges. So that separates themselves from Uniswap or 1inch or the other exchange. Well, 1inch does similar. we'll go ahead and go over the white paper. I mean, we've already made this video pretty long, so we're just going to go ahead and go into it. So Dodo, we already explained how it works. Why Dodo? This is basically going to be a summary of the video. By the way, guys, if you're liking this content, go ahead and smash that like button. If you guys are new to the channel, go ahead and subscribe to the channel. We teach you about different projects, different altcoin projects. We teach you how to be your own banker. We teach you about DeFi. We teach you about all kinds of stuff. And on top of that, guys, I mean, this allows you to stay ahead of the game. I'm not like other YouTubers who are going to shill coins at you and pump and dump them. I'm just going to tell you guys about the projects, tell you the goods and the bads, and you guys make your decision. I'm not going to make your decision for you. I'm not your financial advisor. I'm not your mama. I'm not your daddy. I'm just giving you information. That's it. So let's go ahead and run over the ups and downs. But first, guys, smash that like button. If you're watching this and not pressing that like, thanks, man. Appreciate it. Anyways, so why doo-doo? He said doo-doo. Why Dodo? Low slippage, single risk exposure, and minimal and permanent loss. So we already talked about how those each occur. What can you do with Dodo? Well, Dodo, you can get sufficient liquidity, get away from arbitragers, and basically have a better trading experience. So the reason why DEXs are going to be big right now, you guys saw it with GameStonks, how they just shut it down, and you can't be shut down with this. Like even people who use Binance Exchange, they randomly can't use the exchange because they just shut it down, or they say, hey, sorry, we're not working today. Or the famous one is Coinbase. But so here's an example of the Dodo curve and Uniswap curve. You can see Dodo gives more level pricing and Uniswap gives not as much. And you guys can see how that works. We already talked about the K feature and how that works. And this explains the math behind the PMM. This talks about the K feature as well. You guys can read over this as well. It's a good math problem. But yeah, it's fun. So they even have this cool feature. I didn't even run over it. But just like Aave has a flash loan, this one has the same thing. It's a flash swap. So what you do is, well, first you create the contract and you want to make sure you're going to make a profit on it. Because if you do a flash swap, you're going to be paying that gas fee. And if you're swapping from getting a loan on Bitcoin for trading it for USDC and taking the USDC to ETH and ETH to Bitcoin to pay back the loan, and it's not equaling that one Bitcoin you got a loan on, well, you probably don't want to do it because you're going to be paying gas fees. And it allows you to partake in arbitrage. So it's really cool and neat how it works. But yeah, if you want to check out a good flash swap program, go on under my channel and type in Furu Combo, F-U-R-U, I think it's F-U-R-U, but just type in, yeah, Furu, just F-U-R-U Combo, or even just type in Combo on my channel and you'll be able to pull it up and it shows you how to use it. It's like a 3-minute video. It's really cool. This is also good. They're running a bug bounty, so that way if there's any bugs, people will get paid to look into them, which is really good. It's always good to have a bug bounty. That way if there's issues with your protocol, then they're going to be fixed. And they did have an audit, so keep that in mind. It's really cool. Being that a lot of projects out there, they just copy a source code or fork off of it and just say, oh yeah, here it is, and they don't even have an audit on there. And they just put out a disclaimer saying, hey, this is DeFi, and if you use it, you could lose all your money. And that's how they get around the audit. It's ridiculous. So here's the initial Dodo offering. This is how some of the initial tokens were issued. But let me go ahead and go into the token breakdown. Here's the Dodo token allocation. Total supply of 1 billion. The core team has 15%, investors 16%, initial liquidity 1%, operations marketing 8%, and 60% is going to the community. That's huge. Community incentives are great. This explains the seed round. So 1 cent was the lowest price of this token. So it did pump a bit from that, but if you look at the chart in relation, it really didn't pump as much as it should, in my opinion. I mean, they're doing some crazy stuff. In fact, we'll go ahead and take a look at them right now, see what they did before the video and after. Yeah, they went up a couple cents while we were doing the video. I mean, that's not really saying anything, but it's just, hey, it's a good project. It's really undervalued right now, in my opinion, especially compared to a Uniswap. as well as the 1 inch. Those are two of the major ones. So let's go on DeFi Pulse. So you guys can see this is a total value locked in Dodo. So I know you guys are looking at this like, oh man, that doesn't look good. They came from 100 all the way down to 25. Well, guys, they started rolling out new features, and they're definitely pulling a lot more people on. I mean, just think about it. So let me show you Yearn Finance. So look at Yearn Finance. So Yearn went from up to down to up. You guys can see it just changes, especially with something like a yield farming. Until people find good protocols, they only go to the ones that are great. Like once the ones that are great, they come out, then they slowly get attracted to it, and that's when it increases. Similar to like Augur. Augur has about 2.5 million locked. I mean, that's great in relation, but Augur is already, they only have 2.5 million locked, and their token is ranked with $132 million market cap. Dodo has 3 times the amount, or 4 times the amount. So you kind of you have to keep that in relation to it. So it's not just what it shows up on this chart, or like if it goes up in a straight value. Nothing goes up or straight up over time. I mean, if something does, then well, it's going to pull back eventually. That's just how it works. You guys heard that song, what goes up must come down. Dogs, gotta say thanks to the patrons. Sean Bott, Da Man, Tariq Liu, TL King, JP, PJ, Bernito, Taco Nacho. Dogs, thanks for watching. Alright guys, if you want to catch me on TikTok, I do daily wisdom one-liners and let you guys see the pets and behind the scenes junk. So here it is, scan it, check it out, bam bam. Alright, so next off guys, if you guys want to support the channel and get paid to do it, you guys can check out Celsius. Celsius is fire, dude. So what's so cool about Celsius is, guys, first off, you can get $40 in free BTC using my referral link in the description below. Just deposit $100. Add in the code BTC50. You will also get an additional $50 if you deposit $400, guys. It's free BTC. Next is Voyager, guys. I also got a referral link in the description below. Instead of just only getting $25, you'll get $25 and some free VGX tokens, guys. Next is BlockFi. BlockFi is part of the quadruple threat. Go ahead and make a deposit. Use this referral link in the description below. You get $100. Depending on how much you deposit, you can get all the way up to, guess how much? $250. Alright, so what the pants is Celsius and BlockFi for? Well, you can use both of those as like your bank. They get some pretty nice juicy yields. And Voyager is more so like trading, and it gets some juicy yields as well. And the last one to try is crypto.com, guys. You can trade some like smaller altcoins, and you guys will get $25 in CRO once you guys get the Visa card. Why do I like the Visa card? Well, you can sell crypto and buy some junk with it, so I can buy a sandwich with my crypto. I don't use BTC, but I'll use like stable coins and junk. So anyways, if you guys want to support the channel, that's the quadruple threat. Thanks for tuning in, guys. You'll get paid to do it.